Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another daily cryptocurrency market update. We are going to be starting the video off quite technically. We are going to be looking at Bitcoin. We're going to be looking at something highlighted by the market sniper, USDT dominance, which I think is important, and also the dollar. There is a big correlation, the dollar in the form of the Dixie, with where Bitcoin is at currently at support, where the dollar is currently at resistance, and where USDT dominance is currently at resistance. So there's really one of two things that could be going on here. Either this is just a relief rally at support, and we very much reiterated yesterday that we were kind of sitting on our hands. You know, you've had that impulsive move, that expansion in volatility after a real constriction of it. Remember, we were looking at the Bollinger Bands, the historic volatility. And the moves happen, and people always get bearish after the fact. And ultimately, you've either got relief that could form a structure that will look to take Bitcoin to the downside and see continuation for USDT dominance and the Dixie, or you potentially have the start of a resurgence. But Bitcoin still has a lot to do. It's very interesting to me that I'm already seeing the sentiment from yesterday, and obviously since the 17th, when we had the initial expansion in volatility, and of course it took Bitcoin from 30K down to 25K, already flipping to now being bullish. It's very premature. This is why we really believe that having a sort of longer term outlook. You guys know that we assessed at the start of the year that there was a fundamental change in the crypto market, and that at least the majority of the bear market was behind us, and we were going to have brighter days ahead of us. Now, Bitcoin's followed that very truly. You know, the stock market we've killed in terms of predicting it. Some of our stocks are now at new all-time highs and hit targets, technical targets that we had for them. However, altcoins have really just gone sideways. So it's not that bad. It's given me a lot of time to accumulate. But I want to start the video off technically, and then we'll get into a number of things. There's an article floating around that claims BlackRock holds 12,224 Bitcoin. However, it is rather disingenuous, along with the majority of articles out there and kind of financial trading, crypto things. They're always a half-truth, and there's often not a lot of context behind it. We'll also talk about an interesting tweet that I found that talks about 75% of all trades on Coinbase being made by institutions. Institutions are here, ladies and gentlemen. And then, of course, we'll touch on the stock market a little bit, which, of course, is going to correlate and cross over into our small but very significant space. So a lot to get into, as always. If you guys can do me a favor, smash that like button and a comment. It's always appreciated. It really does help me out. Let's dive into it all. So Bitcoin, of course, had that expansion to the downside. We had expressed our kind of uncertainty here. We said it could go either way. Either you're going to get an expansion to the upside or an expansion to the downside. I know that's not very helpful, but sometimes, guys, I do just have to say I'm not that sure short term. Long term, remember when we got into the market, we are still in it and still believe that market structure is intact. There was one exchange, Bitfinex, that actually broke this market structure. What is market structure? Well, market structure is your typical trend following, which is a lot of what I do. I think people make technical analysis and investing and trading far too complicated. I do not believe you need to do that. I think you can I think simplicity is goes a long way with trading and certainly charting. People add all sort of levels of complication to it, and often they're overcomplicating things that don't even work. So I still believe that this trend is intact. I think this essentially could just be another retest of the resistance that we broke. You know, we had confirming volume on not only the initial break of resistance, but the retest. And ultimately, I could see this fixing itself. But it's got to show strength. You know, it's got to come up and start to really take out these highs before there's any confirmation of that. And until then, you are going to be in a kind of danger zone of this just being relief at support, potentially setting up what could be a head and shoulders that's the right way up. Remember, we've still got this head and shoulders here. So there is a real risk here. We still remain bullish until there's a reason not to. And people got and continue to get very frustrated with the fact that I've been bullish this year. You guys will be well aware, certainly if you've been following this channel for any amount of time, that we were one of the biggest bears in the room. We shorted Luna before the crash. We didn't actually know that it was going to fail fundamentally, but technically we saw structure. It's all publicly out there, and we mitigated. We didn't get involved with FTX. We stayed out of the market for that crash. We stayed out of the market for 3 Hours Capital. All of them we mitigated, apart from the initial sell-off from 69K. So we are not afraid to be bearish. We just don't see the reasons for it at the moment. I understand that altcoins have gone sideways, which is significantly better than going down. And that in itself, I think, is a different market environment to the one that we were previously in. So back to this. It's very interesting that you have Bitcoin here at a time where the dollar is at resistance. So what you've essentially got, and this is why you need to look at multiple markets. This is something that I didn't do really up until sort of a couple of years ago. You've got Bitcoin, you've got the dollar that has been doing this, you've got Bitcoin that has been doing this, and they've both had a kind of pullback. You've got Bitcoin at resistance, support, and you've got the dollar at resistance. Now, you should expect a bounce, which is what you had. The dollar has been surprisingly strong, but we'll look at USDT dominance in a little bit more detail. And you've had a little bit of a bounce with Bitcoin. The issue you've got is if this bounce fails, you're going to end up with something like that, okay? So the dollar will continue to be strong, and you know the levels to watch out for, and Bitcoin will continue to be weak. So what essentially you're looking for now is that the dollar to roll over and for Bitcoin to show significant strength. That is not been the case yet. So the fact that people have automatically already flipped to bullish based on this is, I think, extremely premature. And you are in danger still of this becoming a head and shoulders, and this would give you a target round about this low here, okay? And then you invalidate that low, you really are in trouble. I believe that anyway. So Bitcoin has got quite a bit to do. Francis Hunt, somebody who I've got great respect for as a technical analyzer, a general marketeer, and everything in between, really do value his views on things, has been highlighting the fact that USDT dominance, and he's given actually higher targets for this, is something to watch. Certainly if it triggers. Now, right now, USDT dominance is having a bit of a pullback at resistance, and Bitcoin's having a bit of a bounce at support. This needs to be proven to roll over, okay? And really, you want to start coming and taking out these, and then your bull's really going to be in place. The other side of that, so you need to watch this for going higher along with the Dixie. The other side of that is Bitcoin, again, needs to. USDT dominance literally looks like the mirror of this. Bitcoin. You know, you need to see this keep going. If it rolls and puts in some sort of a right shoulder, you are going to be in a situation where you are looking for downside. This is technically what to watch. There'll be news, there'll be all sorts of things accompanying it. But for now, remember, we told you why we maintained a bullish outlook, even on the short term, until there is technical structure to get bearish. We are not in the business of just becoming a bear for the news flows that are there on any one given day. News flows change very quickly. We do not trade news. We don't even really technically trade fundamentals. We actually just trade technical analysis. And ultimately, I think that there are a number of altcoins right now that are setting up very well. We do have some altcoins that did very well over the past couple of days to the tune of 30-40%. And if you want to find out what I'm holding, where I'm holding it, please do consider becoming a Patreon. You will get access to my full portfolio. So things need to fix themselves, and we'll be watching to see if they do, and of course reporting on it. The stock market as well has been a headwind. We spoke about Bitcoin being that tired swimmer for a while. Yesterday, you had NVIDIA's earnings. They beat expectations. I think they beat expectations for, or been on the money on expectations for about 4 years now. So it's very likely they were going to continue to do so. And they jumped by 170% this quarter, driven by the demand for AI. We think, and this sounds crazy given the macro environment, that over the up until the point where you have a crash is coming, but we think the bears are very wrong on the timing of it. We think that you could have a pretty strong, we've got higher targets for the S&P in regards to, we think the S&P is going to new all-time highs. People thought we were absolutely crazy at the start of the year talking about stocks going to new all-time highs, and many of them are there already. We ultimately believe that stocks are going to go on a pretty epic bull run up until a crash, in a similar fashion to what's happened following every other hiking cycle. We've done lots of work on discourage what I'm saying. I implore people to discourage what I'm saying here in regards to rates in relation to the S&P. And if you look at prior cycles for rate hiking regimes, yes, they do lead to a crash, but it doesn't come until after the fact. It doesn't come when people expect it. And everyone's going, This would be the most predicted crash in history. It doesn't work like that, I'm afraid. I think they're going to literally rip markets into a crash so they can really screw you. Stock market's looking a lot more perky. You know, and I think AI is going to be a huge catalyst for immense upside. You know, is this the pullback that we expected for stocks done? And that's going to be take away that downdraft for Bitcoin, so on and so forth. Bitcoin's at key support. You know, you could get a real short squeeze and a rip here, but we're still not out of the woodworks, and you know what to watch. So stocks look to be sort of doing a bit of a turn. Rip Michael Burry with his $1.6 billion short, which we explained how he had come up with $1.6 billion in the fact that it wasn't actually $6 billion worth of money he'd put in. He likely has short-dated puts that were going very cheap and you were getting them for pennies on the dollar, literally. Moving on, there was an article floating around. I actually retweeted it, and then I read it and thought, wow, what a load of crap. BlackRock holds 12,224 Bitcoin. And of course, this is in the form of MicroStrategy. We know that, you know, they obviously own about 15% of MicroStrategy. This could be just simply because they own ETFs of the S&P. And of course, they have to buy bits of each company. Okay, so don't blow this out of the water. It's a good sign that they are accepting and owning these, but perhaps they're mandated to do so based on their ETFs and what the backing of those ETFs require. Explosive news in the crypto world. Rumors swirling that financial titan BlackRock is using Coinbase to quietly accumulate. I think this would have been leaked if it was a case. I'm not sure. Maybe it is. Who knows? We know they're partnered with Coinbase. We think Coinbase is a gem of a stock, by the way, guys, that will literally be the bank of tomorrow. I do genuinely believe that. When giants like BlackRock make moves, it's hard to ignore. Could this be a game changer for the crypto market? Keep your eyes peeled. Institutions made up about 3/4 of Coinbase's $309 billion in trading volumes in the first quarter. It's a lot of trading volumes for a stock that I think is undervalued right now and technically looks sound. The company said in May, amongst others, its clients included asset managers, large corporations, treasuries, and asset managers. Financial News London. Let that sink in. 75% of all trades on Coinbase are made by institutions. That's all we've got for you guys. You know what to look out for technically on the short term. Long term, we do assess that, you know, the bull is here, basically. For altcoins, yes, it's been a bit of a frustrating one, and I can feel the frustration towards somebody like myself who's been bullish on altcoins since the start of the year. Our time will come, you know. Think things are turning around, I think, and I think there's a real revival happening. And I'd rather be early to that than late. Yes, you have to ride a little bit of volatility, but it's part of what comes in the game. Remember what you're trying to do in the crypto space. You're investing in an asset class that is the most volatile asset class that there is at a time where there's peak macro uncertainty, and you've got the likes of Stan Druckenmiller, somebody who's got a 30-year positive record of being a fund manager, saying, I'm not really sure. It's not an easy task that we're trying to undertake here. On that note, I'm going to love and leave you. Hopefully you've enjoyed the content. If you have, like is appreciated, so is a comment. Lots more to go into. We've got lots of videos coming out on certain projects where we see real opportunity, but do stay tuned for that. See you all in the next one. Thanks for watching. Catch you in the next.